Hey guys, so one thing that is not a super when people think of Fibonacci, there's one way to use it that doesn't get enough credit, right? And so one question that I often get is not particularly related to finding the best entries, but finding the best exits and how to formulate take profits and effective take profits. Well, before we start trading live, what I want to do is I want to factor in or start to incorporate learning how to take profit successfully. So we're going to focus on two things here. We're gonna focus on entries, and we're going to focus on finding take profit zones uh, based off of uh, Fibonacci levels. Sorry, I don't know why that took me so long to get out. Um, so once we start to give ourselves a little bit of a map, we can pair retracements with strong structure to give ourselves better visibility into where we think we could realistically find a decent exit. So for instance, let's take this higher time frame move here. The overall move, right, that big run. Well, if we look to get short from here, that's a pretty perfect entry. Right? We've got decent resistance. We've got a uh, nice little run up. We've got our channel topper there. And we've got a couple other things in our favor. So really, right here is a fantastic entry. And I'm just going to mark this off so that we don't have to keep that fib up there. Got a nice solid, something that stands out as our fib. So it's right along a good bit of structure. We get a great short entry. Absolutely perfect. So now you could start to look for various strong levels to hold for. So if you enter this, right, we're on a 4-hour chart now. Let's say that you look to enter this off the 4-hour chart and you were wondering where to take it. Well, yes, you have all of your structure that you can start to plan around. But if you want to leverage something a little bit stronger as opposed to just structure, and you want to leverage structure as more of a I'm just going to drag my stop loss behind and keep this this is more for traditional traders, whether it's spot, forex, or futures. Um, but it still works well, like if you were to target out of the monies on smaller time frames. So let's say we're short from here, and we're looking at for a target and also what to use as structure for trailing our stops. Well, the first trail, pretty clear that once you break below, zoom in there and try and expand it a little bit to make it a little more clear. So once we break down below this strong level right here, and then we start to make a run back up. We've got the 50, we've got our structure, and we've got the 61.8. Well, here's a great place for your first trail, right? So this is a fairly strong level that we could trail price behind. So now we're in profit, right? Our trade's working for us. We're not working to break even on this trade. Our trade is working for us. So now what do we do in terms of finding a strong area to hold? Well, the first thing would be fib the swings, right? So fib from your low to your high and find strong levels. So let's see, here's our 50, right around decent structure. Here's our 61.8, right around decent structure. And here's our 78.6. I'd say that 78.6 is a good stretch goal, especially considering we had a perfect fill of that 78.6 going to the other side. So if you're thinking in terms of completions, right, and extensions, which we haven't gotten to yet, But if you're thinking in terms of profit-taking extensions, you're looking way down here. That's a bit of a far-fetched thought, in terms of where to take that trade. But if you're looking for like something that's on a weekly, right? Like let's say that there are some weekly strikes that are really low cost, right? And you wanted to grab it out of the money. Well, if you fib that again, these would probably, you could probably get these for like $1, right? These probably wouldn't really do much, but that's a lot of movement to expect. But this 38.2 right here, that fills in a couple of days, and that's a fairly reasonable expectation. So right here would be a great opportunity for, target one. So let's say that you're short trailing this, you want to see how it reacts off of this trend line. Once it breaks this trend line, well, now you've got the opportunity to get out of your trade and then capitalize on some more moves, right? So if it continues down past, you might lose out on a little bit until it retraces and you can find another entry. But if you get out here and it retraces back up, you risk getting stopped out based around structure. So we know why we took profit off there. We know where our other, strong levels are. So this is trade one. Well, now that we're retracing back up, you don't always have to just take it as a swing the entire time. You can capitalize on letting this retrace back up a little bit, and you can actually capture more ticks, more points on the way down than you would if you were to just hold for the entirety of the swing. So we've got our 61.8 right here. It's a good close retest. We don't actually get the full fill, so I don't know that I would have gotten in. Really, let's say that we made it up to here. That's a perfect retracement, and that's actually, I'm going to differentiate. I'm going to use ovals and circles for entries and squares for exits. So that's a great entry up there. We never quite fill, but let's just say that we do. We know where our next strong level is, right? Our 61.8 right here. Now, obviously, we blow straight through that. We get a little bit of a bounce off of that, but we blow straight through it right to that. Sorry, that was the 50. We actually blow through all the levels except for the 78.6 at first. So you could see just like trailing down. Let's just assume that we're playing it safe, because there's not really much structure to worry ourselves about here other than that. So we break down, we take profit right here, right? This is our first take profit off of this entry. So now we start to look at, well, we broke through and we come back up and retest. Well, we retest that structure that we took profit off of. If we go down to the hourly, I wonder if we could find a nice little impulse run that would give us a retracement, and we can. So you can see the strength at which the bears are still pushing down. We get our 61.8 retracement right off of that level. We know that our 78.6 sits right here. So again, this all just goes to capturing momentum, right? So we've got our 61.8, we've got our old take profit zone, we've got resistance that we've broken and now retested. This would be a fib completion. I'm not going to map it out, but it would be an hourly completion. And so now you've got another entry, and instead of having to hold this for a swing, we use the same bias as a nice little downtrends that we just took out of the monies or at the monies, and we had targets, or we just took little chunks of it and we didn't have to worry about taking it all the way down and holding through the retraces. They were all legitimate exits and they were all legitimate entries, but they were all based off of Fibonacci, right? So now we've got this larger scale run from here, from once we broke to the low. Right, we get a nice fill back up to the 61.8. You can see we front ran it by like less than a point, less than really half a point. So you get your next entry here. And again, you know where your next structure is. But let's say that you were waiting for that, right? So let's say you didn't get in there but you did show the bears coming out of that zone, and you can see how quickly it fell. Well, now you've got structure right here. So I'm not going to mark that off as an entry because it wasn't exact and it wasn't precise. But now you've got where it fell from down, and you've got another nice little area to look towards right here. And again, we front ran by less than a half a point, but at least we tested structure this time. So now, if we pull out our completions, I guarantee you that this is at least a 23.6 completion. Might be an ABCD. And it is, let's see. I'm just doing this for my own curiosity. Yep, we filled out 160. So that's an ABC. That's something that we'll get into later, but that's a perfect fib. Like, this is all based off of fib structure. That is a perfect completion. But just on structure alone, now you know we'd have one target. We have the second target, right? The second target being that supply zone. If we go back to our 4 hour, is there any structure here? No. So there's nothing that really tells you to enter here except for breaking out of the zone, coming back and retesting it, which might be enough for you. For me, well, let's see. We actually have a nice little channel bottom there. If we grab our low up to that little run out, you see we get that 78.6 retracement. So we've got our entry now, right? We've got our entry. And now let's look for our exit. We've got our high. And if we pull this move down, we're right back where we started, the 61.8. Where is it? It's right where we just marked off. It's right here. So we've got our entry, and now we've got a perfect target. And you can see the initial reaction off of that is we fill the 61.8, we fill our structure and resistance, and then we drop straight down. So here's a perfect long entry and a perfect first target. And you can see it's a straight shot. There's not even any guesswork there. Similarly, if we were to look at this overall run, see, we don't quite get the 50% retracement, we get the 38.2, so that's not necessarily a super strong entry, just the fact that we're testing structure. So I wouldn't consider that, but it did break an area of consolidation. You could see that coming out of this is a very measured move coming down. We've got that 61.8 that fills. Then again, looking for your exits, this is probably, if you look at pure completions, this is probably a 61.8. It is. And then we've got 78.6 right there. So you've actually, I probably wouldn't have taken it all the way to this level right here. We fill out negative 23.6, and we'll get into this. Negative 23.6. Okay. I probably, myself, would have taken this, if I did get short here off of that retracement, I probably would have taken profit here, just because this is, and then been done for the week, because this is where, this is really, unless it just blew straight through, but this is really where, for me, that great structure stops. It fills to nice structure down here, but this is just a safe exit. Maybe I would have trailed very tight coming here and then hoped for a breakthrough. But again, all I wanted to showcase was just how you can use fibs for entries and exits. I haven't seen anything come through or much come through in terms of mapping out impulse moves, both high and low, and swing moves. But while you're recording that, start to look for not only entries, but pairing what you're learning about fib with exits, right? So you've got your strength of the 61.8, the 50, and the 78.6. Those are great areas on larger scale moves to look for exits, paired with, if you're looking for a measured place to get out. Again, you can just see, this held, then this got blown through, but then this held perfectly. So Fibonacci is used as really opportune areas on both sides of the spectrum, both for entries and exits. And you could use it for stops too, right? So let's say that we entered short here. Well, your next stop, and this is something we'll get into as we're actually trading, but your next stop, right? We got in here, your next stop, this is a pretty easy stop to set right up at that, just above that 78.6. Maybe you want to lift it just a little bit above structure, but that might be a little bit too far. But again, this was just meant to be a little quick video on how to start to incorporate Fibonacci in both sides of your trading. So no homework. I'm still waiting on lots of homework from the initial Fib videos, but start to think about this as well.